So a warm welcome to everyone joining the session, Principles to Practice, Trends and Opportunities for Impact Investing. I'm Jennifer Price, the President and CEO of Calvert Impact Capital, and I will be moderating this session that is, in my opinion, well-timed and well-titled, as we find ourselves at a pivotal moment in responding to COVID, climate change, and growing global inequities. These overriding realities are shaping impact investing and underscoring investors' interest to have impact. It is challenging us to think and act differently to build back better. Within this larger dynamic, how do we know if we are investing for positive impact? This question gets to the heart of this webinar and the conversations to come, which will explore recent developments and opportunities within impact investing, and specifically impact measurement and management. The convergence and evolution of the impact measurement and management practices have been increasing over the last years. In its 2018 Roadmap for the Future of Impact Investing, the GIN cited the need for the establishment of clear principles and practice standards. IFC took the initiative to develop these principles, and the GIN was a key member of the external sounding board that helped shape the operating principles for impact management, which were then launched in April 2019. As you will see, there remains a close collaboration between the GIN and the impact principles. Amit Buri, CEO of the GIN, is an observer on the advisory board for the impact principles, and the GIN is involved in key initiatives with the signatories to the impact principle. Today, these foundational efforts and the engagement of others behind this work is rapidly expanding and creating collaborative momentum. So despite the turbulence in the global markets, there has been continued investor interest in impact investing. Since June 2020, against the backdrop of the pandemic, 70% of the impact investors surveyed by the GIN indicated that the industry was growing steadily. The number of signatories to the operating principles for impact measurement is also growing, currently numbering 112. All this underscores the commitment to invest for positive social environmental impact, despite the challenges posed by the COVID pandemic. As a practitioner myself, leading Calvert Impact Capital, a US-based impact investing manager, I see day in and day out the importance of striving for greater impact and continuing to further understand the impact of our investments. Over the past 3 decades, Calvert Impact Capital has engaged with over 20,000 investors with investments that range from $20 to $50 million, and of all types, institutional, financial advisors, and individuals. So the individuals and investors come in all shapes and sizes, but consistent is their ask for knowing the impact of their investment and delivered in a way that is easily understood. So with this in mind, I am confident in saying that the importance of this conversation, this session, cannot be understated, as in ensuring the continued standardization in impact measurement and reporting to support increased efficiencies and better outcomes, all with the goal to move more money into impact investing, have more impact, and bring about sustainable change. As I mentioned at the top of this call, the webinar today has 2 parts. We will start with a fireside chat with Amit Buri, the CEO and co-founder of the GIN, and Diane Damaski, the head of the Secretariat of the Operating Principles for Impact Measurement and Management, to talk more about the state of impact investing, where the industry is going, and importantly, the collaboration between the GIN and the Operating Principles for Impact Management. Following the fireside chat, we will move into a discussion with signatories of the principles, practitioners in the field that are incorporating impact measurement and practices into their daily work. So I would like to introduce formally Amit and Diane. It's wonderful to be with you both, and thank you for making the time to be here and share your perspectives.
Thank you, Jen.
Thanks, Jen.
You're welcome. All right, Amit, starting with you. I think most people know that the GIN was founded, I think it was 2009. Do I have the date right? Yeah.
Yeah, that's right. Thanks.
Yeah, and it's a critical part of the ecosystem that grounded the practice of impact investing in the early years, and has also been a convener and leader, moving the field toward a collaborative and organized way across the globe and all investor types over the last years. And meanwhile, over the past decade, the field has seen enormous growth, doubling, tripling in assets. Invested as well as managed through the Great Recession, all these events happen. But then comes 2020, a year like no other, which I'm assuming was not either in your strategic plan or the framework that you set out in 2018 to guide the field. So from your perspective, how has COVID affected the impact investing market, and how have investors in the gym been adapting since the pandemic began?
Thank you for the question, and it's such an honor to be here to talk about these important topics with all of you. Just to start, 2020 was clearly full of really troubling surprises. With the unfolding of the COVID pandemic, and what I would argue is not just one crisis, but a series of crises that the world has been contending with as a result, of this what started as a public health crisis. Which quickly became, of course, an economic crisis that exacerbated inequities, whether they be based on racial inequities or in gender inequities. Of course, we had the climate crisis continuing on, and last but not least, also a crisis in trust. Trust in institutions and trust in all sectors had declined, whether it's the public sector, the charity sector, or the business sector. And against that backdrop, I think it's important to have this conversation because when we think about that, the impact investing market and how it's changed, 2020 had a profound impact on the market in a couple of dimensions. First, the communities that impact investors are trying to benefit, the ones that they're trying to support when they make impact investments, were incredibly hard hit, whether that's lower income communities in the global north or many communities in the global south. We saw the economic crisis wreaking an untold havoc on many communities that were already marginalized or underprivileged. We also saw a growing recognition that if we want to actually build back better or can reshape the markets to help build in more resilience for these communities that were hit so hard, we have to change the way the world invests. And so we've seen an increasing urgency around the Sustainable Development Goals and the Paris Climate Accords coming from the private sector. And that has actually accelerated a trend that we saw before the COVID crisis of increasing interest from mainstream investors in impact investing, which I think is an incredibly great opportunity because we all know that to achieve the Sustainable Development Goals, we have to have a much greater volume of capital flowing. But ultimately, we're not trying to achieve capital at scale. We are solving for impact at scale. And that's why it's so important that, and we prioritize this in our strategy around safeguarding the integrity of impact investing as the market continues to grow. And I think those two themes, scale and integrity, are important for the backdrop for this conversation today. Because as we do see more capital flowing in the market, we actually have to ensure that that capital actually realizes real results for people on the planet. And with that in mind, I think this conversation about safeguarding the integrity of the market and the principles for impact management are so important for how we shape the market as it grows going forward.
And Amit, I love that word safeguarding you just used. I often say scaling with integrity, but the safeguarding really captures what we're trying to achieve. Do you think we're on the right path there? Do you see the right pieces falling into place?
I do. I don't think we've completed that journey in terms of safeguarding the integrity. I think it will take ongoing work, but we've seen kind of an entire ecosystem of efforts that have all been evolving quite rapidly just in the past few years. So you mentioned the 2018 roadmap for the future of financial markets. And what's important to note about that document, which our members had a great role in informing, was that was originally intended to be the future of impact investing. But as we did our work and our research, what we realized that we can't just grow impact investing in a bubble. If we're truly going to have a systemic impact on issues like inequality and the climate crisis. So we have to grow impact investing with an eye towards how we influence the broader capital markets and finance overall. How do we have an impact on investing itself? And there are a number of pieces that we outlined around safeguarding the integrity of impact investing. And a number of those have actually gotten a lot of traction in recent years. So a couple of years ago, we launched the core characteristics for impact investing, which really helped define baseline expectations for what good impact investing looks like. The IFC, of course, led this effort to launch the principles for impact management, which I think really bring some discipline around the process that investors can use to embed impact into their management process, investment management process, I should say. And last but not least, we launched Iris Plus, which builds on a decade of work that we've been doing in the GIN with our community, but really marks a step change in the sophistication of impact measurement and management. And Iris Plus, for those who aren't familiar with it, is a system for measuring, managing, and optimizing impact. It's free, it's online, and it's really oriented to help investors convert impact intentions into real impact results. And so all these different efforts, among others, are part of an evolving ecosystem that helps both ensure that capital is flowing to those opportunities that have the greatest impact, helping us foster collective learning about how we can best achieve impact, and safeguard the integrity of the market as it grows.
Thank you. And Diane, I want to pull you in now around the safeguarding. Amit shared all the collective efforts happening underneath. One very important one is the impact principles. Would you take the time just to share, the collaboration upon which they were built, where they are today, and in general, how they're coming together to really advance this safeguarding of the industry?
Thanks, Jen. Thanks for the question. Yeah, we're approaching the second anniversary of the launch of the principles, so it's a great time to reflect upon how they have affected the market. When IFC raised its hand to lead this effort, there was no standard, no set of principles for impact investors. PRI was there to incorporate ESG considerations into investments. The green bond principles existed for the green bond market, and also to mitigate the risk of greenwashing. But in the impact market, there was absolutely nothing. So as we've already mentioned, the GIN's 2018 roadmap was a really critical piece to highlight this noted gap in the market. And at the same time, there were a lot of concerns, growing concerns of impact washing. So what have the principles brought to the market? Well, first, they've helped clarify what it means to be an impact investor. What are the impact management systems and processes required to ensure that impact is incorporated throughout the life of an investment? Second, as Amit just referred to, they brought a much needed discipline to this market. All signatories must publicly disclose on an annual basis how their impact management systems and processes align with each of the principles. On top of this, they need to provide independent verification that affirms this alignment with the principles. This is the infamous principle number 9. And principle number 9, as we were developing the principles, was critical to reduce the risk of impact washing. There had to be some exterior, either internal or external independent party that can verify the systems and processes. And third, the impact principles provide yet another forum for engagement and collaboration amongst impact investors. This is still a relatively new market. It's got a lot of room to grow and mature, and it will continue to evolve. So the signatories are very keen on working closely together with the GIN, with other impact organizations to ensure that this market develops in a disciplined fashion, and they really want to help shape the future of this market. So the collaboration that you asked about, the principles are founded on collaboration. It began with the GIN. The GIN, when we approached the GIN, said the IFC would like to move forward and lead on the development. The GIN was enthusiastic because it's a big task to undertake, and IFC was really one of the best organizations to move forward on this. Also, IMP was critically involved at the beginning, and then there was an extensive consultation with global impact investors, public, private sector, other stakeholders, civil society. So the impact principles are the result of a massive global collaboration. And it continues. As you mentioned, Amit, from the GIN, and IMP are both observers on the advisory board. And every signatory workshop that GIN has a very strong presence as we discuss the key topics around impact investing. And I know we'll get into a little bit more detail on the impact metrics later in the webinar. But this collaboration is key. We're not all operating in silos. I get this question quite a bit. How do you all coordinate this? We all want this market to move forward in a disciplined fashion. We all want it to move in the same direction. And this collaboration between the GEN, the impact principles, and others is really critical to do that.
Thank you, Diane. And there's a few things I want to come back to that you said, but first, Amit, just touching on this collaboration, and can you get into a little bit of the weeds, but not too much, around what the GIN and the Secretariat and the signatories have been working on recently, and then how is that moving us all forward is the real question.
Yeah, absolutely. And you know, obviously we're a network, and collaboration is built into how we operate. And the roadmap that we've referred to a couple of times was really written as you know, a roadmap for the entire market, you know, with the intention that different kind of leaders would step up and take on different pieces of it to really help, you know, drive a framework that would allow the impact investing market to realize its full potential. So we wrote it with the intention that people would actually take on the leadership role like the IFC did, to drive a process to develop the principles, and they actually kind of announced their intention at a preview of the roadmap that we held at our Investors Council annual meeting. And from that point forward, there was a lot of discussion with a variety of stakeholders about how to actually craft principles that would really bring you know, the integrity of impact investing to a new level. And I think that's played a really critical role. But there was obviously stakeholder engagement you know, throughout that process. We also, you know, fed into that through our membership, and many of the signatories are members of the GINS network. We also were closely coordinating on things like the development of the core characteristics at the same time. And so this, I think there was a very healthy you know, spirit of collaboration throughout. One thing I also do want to you know, speak to briefly, at least, is the work to also harmonize indicators for how we measure impact. I spoke about Iris Plus earlier, and one of the things that's we've been working on for the past you know, about a year or so now is an effort to harmonize indicators between Iris Plus and what's been developed for the impact investing community broadly, and work that's been done for a long time amongst the development finance community around harmonizing metrics between organizations like the IFC and the many members of the European Development Finance Institution Association, or EDFI for short. And what we saw as an opportunity coming out of the last time we had our GIN Investor Forum in Amsterdam, back when we could all get together at big conferences, was an opportunity to try to sync up and harmonize the work being done with the development finance community and the broader impact investing community. And we've actually been working to develop what we're calling joint impact indicators, which, you know, and we'll be making a broader announcement about those in the coming weeks, but to help make sure that impact investors can speak the same language when they're talking about how they're measuring and managing their impact. And I think that's another effort you know, that really underscores the collaboration that we're seeing throughout the global network, that would help increase the sophistication of, you know, for all impact investors, large and small, throughout the world.
Thank you. And, you know, coming in through the chat just are questions that relate to how this conversation reaches ultimate recipients and borrowers on the ground. And we're going to get to that in the panel. But one thing, Diane, I did want to pull up out of your comments, which we will also dive into in the panel, is infamous principle number 9, the verification process. We're going to be hearing from groups that have gone through that, and, you know, the opportunities that offered them in their organization. But just even pulling it back, Diane, you're the central node as the head of the Secretariat for the signatories, and you've watched signatories move through 2020, navigating unusual times. And as Amit rightly said, you know, we have a lot of macro changes in our world coming at us. And so a turbulent time, to say the least. Have you seen how these principles has helped the signatories navigate through these times, and how you see it supporting the evolution of the industry?
Yes, thanks, Jen. What I hear from signatories is the whole process of producing a disclosure statement was an incredibly useful exercise, because even Calvert that has been doing this for years, when you actually had to step back and put in black and white how you do what you do and what you've been doing for years, it really allowed all the signatories to take a step back, take a critical look at their impact management systems and processes, and really hone them, modify them, look at where they might be improved over time. And those disclosure statements and that discipline really supports them in managing through challenging times. They can look to the principles saying, well, how do we think about, implementing, principles 5 and 6, and really helping the investees and working with them through these times. We did a webinar on responsible exits. Exits are very challenging in these times. Many are being delayed because you just don't want to leave investees in the lurch in times when they really need maybe more capital and more time to achieve the impact. So I think the principles just really support the discipline that the impact investors had since they've launched their different strategies. So I think they've been very helpful in that.
Thank you, Diane. And Amit, we're coming to the close, but I would love you if you want to just put a small bow on this conversation as we bridge into the next panel. Just looking forward and where we're going with the joint impact indicators, with safeguarding the industry, where the GIN is leading their membership and what you hear the members asking for. Any thoughts?
Yeah, sure. Tall task to put a bow on such an important conversation, but I'll do my best. I think, if we, obviously this is an incredibly challenging time in the world for all of us, personally, and for all the people that motivate us to be working on impact investing in the first place. And I think that it is, important to note that, this is a time, when it comes to impact, that the world cannot afford for capital to underperform. And we need to make sure that we're having the greatest collective impact possible to really respond to the needs of the people, all around the world who are suffering as a result of this crisis, and of course to support a sustainable and healthy planet. And what I see is this opportunity and the work that's being done here is really an important moment of leadership for the impact investing community. Because we now see, from the GIN's perspective, a lot of people who are not part of the impact investing community becoming interested. Large corporates, institutional investors, and others who are seeing that they need to use their capital in a different way if they do want a sustainable society and a sustainable planet. And I think it's up to all of us collectively to show them the way of how they can actually deploy capital to have a positive impact with integrity. And I see this entire ecosystem of efforts that we're talking about here today as really our leadership opportunity for helping to guide what I hope is a much greater pool of capital to ultimately be moving towards the issues that we all care so much about.
Thank you, Amit, and thank you, Diane, for your continued leadership, your perspectives, and your time to just share with us all this exciting work happening that might not be as obvious from the outside looking in, opening it up a bit and letting people understand all the collaboration, all the thoughtfulness that's happening to really create more efficiencies, better practices, and as we all said, better impact. So thank you so much. And we will move on to the panel.
Thank you.
Thank you.
Thanks.
So moving along, I'd like to introduce our panel. We have 3 great colleagues, all deeply experienced, which I'm very excited and honored to introduce. Maria Teresa Zappia of Blue Orchard, Dietska Simons of FMO, and Allison Spector of Nuveen. All 3 panelists are practitioners in the field. So we're going to kind of get in a little bit deeper now and really talk about how the principles, how the safeguarding is working in their organizations as they're moving money into impact investments, raising capital, and reporting back to investors. All these panelists, by the way, are signatories of the operating principles. And so without further ado, Maria Teresa, I can't quite see you, but I'm sure you are there. There you are. No, there you are. Great. I just want to make sure we had all the panelists.
Yeah, exactly. Here we are.
Exactly. Okay. Actually, Maria, Teresa, I'll start with you. Blue Orchard, as many know, is a leading impact investing manager, a pioneer in the field. You work across many markets and sectors and have a history that reaches back decades. Even so, 2020 must have been a new and unusual experience for the organization to navigate. Can you share why, just stepping back, you adopted the impact principles and perhaps how those principles have helped you navigate 2020 and just in general, how your approach to impact investing has been impacted by the principles?
Thank you, Jen. So great question because, it's almost like 2 years down the road since we signed. Blue Orchard decided to participate in the first batch of signatories, so back in April 2019. And at that point in time, I guess the reason for us to sign up was that we were looking very much for an umbrella framework where we could effectively bring in our own intellectual know-how and experience of 20 years of fund management in impact investing, but also really in a way use as much as possible the best practice out there. So it was perfect timing because the impact team had decided that it was time to really upgrade our game and be much more detailed in terms of our ESG and impact assessment. So the framework gave us a great opportunity, as you said, as a long-standing impact investor, to actually put the house in order and do it not in a self-made way, but really following best practice. And so we, along and in line with the framework, we upgraded our impact management and measurement system, and developed a new, set of tools under the impact framework, and really tried. We did this because we were convinced this would resonate with us as practitioners, but resonate with our investors. And that's exactly what happens. We saw that there were a lot of, development financial institutions themselves signing up, a lot of private sector. I'm thinking about, Credit Suisse, UBS, and so effectively our investors were themselves, signing up and aligning to the principle. So it did, resonate very much with us, the adoption of the principles. 2020 was also a good year because, in 2020, I think many of us had extra time to rethink. And so it was an excellent year to see two things. First of all, that, good impact investing strategies are resilient at time of crisis, and that having a good, again, impact management and measurement framework is actually something that would really help in the discussions with the investors. And that, as I said, extra time to literally put these in place, go through an implementation phase.
Mm-hmm. Also in 2020, you went through the verification process, as you shared. In that process, is there, even some specific, but maybe more general opportunities and challenges, or what did you learn by going through that and that next level of detail that really perhaps changed how you operate?
No, and again, we did this more or less in a 4-month period. But as we were in the process of upgrading our impact management framework, was actually an incredible opportunity to have fresh eyes on what we had in mind, and so we got a lot of inputs from the external verification on how things could be strengthened. I have to say, it also gave us more weight internally with our own, investment team and risk management team, to go back to them and say that certain steps, in particularly impact at exit, for example, needed to be recorded. we needed to have targets, and it wasn't us, saying this, but it was actually, the framework effectively, in order to fulfill and align with the framework, we had to go through these steps. So it really did help us immensely. Also, I have to say, gave us a lot of satisfaction, because at the end of the day, yes, there are challenges. Yes, there are bits and pieces that we had to fix, but it also provided us, I think, an excellent reassurance that what we were doing was in line. So you do what you preach and not otherwise. And I think what we learned as well is that our investors are actually now using the external verification. Some of the large banks, for example, are rating investment vehicles if they are or not aligned with the principles, and if they have an external verification. So, it gave us an additional opportunity to stand out of the pack.
And Allison, I'm going to come to you, because Maria Teresa talked about internal leverage, and I'm curious from your perspective. Nuveen sits in a different place in the impact investing ecosystem. Correct me, but I'm assuming the practice of impact investing is a part of a larger portfolio of work that Nuveen does. And so I'm curious, if you could share a little bit of how impact investing does sit in the work of Nuveen, but then also, therefore, why adopt the principles. And to this point of internal communication and leverage, have you seen that be a real benefit of being part of the signatory of the principles?
Absolutely. Thanks so much, Jen. Hi, everyone. It's great to be here. So as Jen rightly mentioned, and for background, Nuveen is the investment manager of TIAA, with about $1 trillion in assets under management and over $6 billion in what we would call impact investments aligned with the impact principles. And that cuts across private equity, affordable housing, and public fixed income currently, with other asset classes really jumping at the bit. So impact is very much a growth segment at Nuveen. And like Blue Orchard and my other panelists, we've been doing this for a long time, over 30 years. And even for us, though, the principles really represented an opportunity to document and formalize our practices, to benchmark our practices against our peers, and certainly also a lot of learning opportunities for us. In our private equity strategy, for example, we too needed to up our game on the responsible exit piece, especially with regard to documentation. And I think the principles really gave us sort of the wherewithal and impetus to be able to do that at a large institution like Nuveen that involves multiple teams. That's not just a decision for our team. And so it really helps us have a little bit more credibility when we're asking for something like that. But specifically when we talk about internal leverage and across asset classes, I think what the principles have really done is establish some discipline in what we label impact. And we've chosen to maintain that very high bar, we would say, which is that any products that are labeled impact investing need to be aligned with the principles and also verified. And so we have a number of strategies internally, for example, like methane capture on dairy farms from our agribusiness team, or we do a lot of renewable energy. And there's always questions around whether these should be labeled as impact investing. They're clearly impactful. There's many positive externalities that are being enhanced. But it's been very useful to use the principles as a framework for almost setting product guidelines and saying, okay, if you want to label this impact, you also have to make sure you're managing for it throughout the investment process, and akin to the way we would manage for ESG. And so that's been super helpful. I think in that vein as well, it's been useful to remove the concept of having impact and the depth of impact from the conversation about whether you're doing impact investing. And that can always be sensitive, right? You could have a very successful ESG strategy that is having tremendous impact, and portfolio managers might be offended if you tell them it's not impact investing. But I think the sort of focus on the practice versus what type of impact is created or is possible has been very useful as well, the sort of level set. And I noticed in the chat there's a question about the EU regulations. So it's definitely something that we're thinking about as well, the sustainable finance disclosure requirements. And the impact principles are one way that we're thinking about criteria for classifying specific products that are in scope, for example, for Article 9. So I'll pause there, but they've definitely been helpful internally.
Thank you. And I wanted to just go one step deeper on, pieces you were mentioning, the EU regulation coming on board, our earlier conversation around convergence and standardization, the joint impact indicators. As a practitioner, are you seeing, some of this convergence making just your day-to-day job perhaps easier? That there's better efficiencies, more clarity, easier practices? Yeah,
I mean, I think we've always been strong supporters and advocates of convergence where it makes sense. So the way that we approach impact measurement, for example, we will collect any and all data from our investees. But then at the manager level, we do the work, and we suggest common indicators, but we also appreciate that may not be easy or possible. But what we take on at the manager level, instead of passing the burden down to our investees, is to then convert the data that we collect into common indicators that we can then use for benchmarking or aggregation. And so in particular, we invest alongside DFIs or often after DFIs in many of the companies that we finance. And so the collaboration between HIPSO and the GIN and the joint indicators is really useful because what it means is that when we go into a deal, the companies are often then already reporting these metrics that are standard. The DFIs have often provided that technical assistance to be able to do that. And so it actually makes it very easy for us to take those indicators and continue on our way. My hope is that this alleviates some of the reporting burden, and particularly on investees with greater collaboration, because that's something we're always sensitive to.
And I'm going to pull in Dietska now. You mentioned partners with DFIs. Dietska is with FMO, and again, sits in a different place in the impact investing ecosystem. And curious from your perspective as the Director of Finance, Impact, and Data at FMO, the adoption of the principles, why from your perspective? And also, as you think about how they've been implemented, we're getting questions in the chat about how it does impact communities, how it goes all the way down to the ground. FMO, in my opinion, has always played a huge leadership role of not only providing capital, but also technical assistance. And if there's insight there, even around the technical assistance, how these impact indicators, how this convergence of impact indicators has been brought into that work.
Yeah, so thanks for being here. Yes, I think as a DFI, our approach was already quite aligned to the principles when we joined early from the start of the principles. And it is indeed because we already have, of course, our investments adhering to strict ESG standards, and also, of course, with our corporate strategy, which is aligned with the SDGs and also has been operationalized already for quite some time into an impact management and monitoring system. We also did some changes to actually start also managing more on a client-specific level for impact, really tracking much more explicitly, what is the expected impact and how does the client also deliver on that? And then if there's a need, how can we also support our clients in case impact is not materializing as hoped for from the beginning? Perhaps it's also good to explain how we've organized our impact within FMO. So basically we said, well, for us, impact should be at the same, let's say, should be organized similar as finance. So we have in our investment side, we have an impact team, which is really working with the deal teams to really bring impact to the client. So also, for instance, our technical assistance is with on the investment side. Then we have at, let's say, the chief risk and finance side, we have an impact measurement and reporting team, which sit next to, let's say, how we do finance and accounting. So that's my department. And then we have also separately a knowledge management and learning and development team, which does the evaluations and brings also the lessons that we learn back, let's say, to the beginning of the cycle. And our experience has been with this, let's say, this way of working. That it has a lot of advantages, into the chain of impact. And one of the things I wanted to specifically highlight, because that's also, I think, where I feel we have a role as a DFI to also bring towards other impact investors, is that, I mean, if you're taking impact seriously, you obviously also need the tools. And this is also where we clearly shifted attention to over the past few years. In particular, we realized that if you want to work towards managing not just your impact, but also your ESG in a coherent way, you need, at least we found, you need to manage for it also via one system. However, looking in the market, we didn't find any such tool or system that complied with our needs. And we have therefore been building it ourselves. I mean, and FMO is not gigantic, right? Nor are we small, because we have a 10 billion euro portfolio. So we wanted something that is easy to maintain, but also that in the end, what we do that can also leverage for others, right? That it, well, hopefully in the future, also other impact investors can learn from it, and also potentially our clients. So I guess also why I'm mentioning it is because it went live this week, and internally we are very proud of it. And I think, it's really for us is the next step into, tools, cooperation with other impact investors, and, can we bring this also to others to use? And I think that's also something else which is very important, in addition to what the principles bring, what, let's say, for instance, the joint impact indicators bring. So I guess I'll stop here, but that's what I wanted to mention as a starter.
Congratulations. I'm assuming this has been 6-8 months of work that, you're celebrating the emergence of.
Yeah. No, yeah. This has taken almost 2 years.
Ah, okay.
So it's yeah, but yeah.
Congratulations. Along those lines, I mean, it's institutionalizing your practice by building this platform and bringing people around. And just even from my own experience at Calver Impact Capital, one of the great benefits we found in going through the verification process is, funny enough, a lot of the practice was in our head, not on paper. So it's had to cause us to really pull it out of our heads as practitioners and put it on paper and create processes and procedures and really institutionalize the practice that we've been doing as a business, as an organization, as a culture for decades. Is there other areas of kind of this institutionalization within FMO that has emerged over the 2 years that you've been a signatory, or even as you went through the verification process, that really roots or grounds your impact practice within the organization now?
No, I think the ones I mentioned were very important, but I guess it's also now in the cooperation with other, especially for us maybe DFIs, where the next steps are being made in really grounding impact. And I think this is also where the joint impact indicators come in, because what I see is if all of us would indeed measure and report on the same, not only would it greatly benefit our clients, right? Because they don't, they wouldn't be burdened by having tons of different questions and requests for reporting. But also, I think as impact investors, we have a role to play, because in the end, we know best how to measure and to manage for impact. So the example I always give is, let's say every non-financial reporting says, well, you need to measure the number of FTEs, right? But what does it really say, right? It's really also about the quality of those jobs. And this is where we as impact investors come in. But if we all then do that differently, then still it's incomparable, right? So if we at least agree, well, this is how we want to do it, that then really leads the way also for investors at large to start doing it that way. And then, of course, with that transparency, change will come. And maybe something else to mention is also on a more simple level, or I don't know if simple is the right word, but what we're also doing together with other DFIs, and those include CDC and the African Development Bank and several others, is that we're also working on how do we model for impact, and can we really jointly learn from that? And that is where our joint impact model comes in. So we all had different models to measure or to model the indirect jobs, for instance, and value add. Almost 1-2 years ago, we came together and said, well, it would be great if we can, join, make one model, and then also make it publicly available for all other impact investors or other investors and clients to start using it. So that's what we did. And it was a great journey, because you learn so much if you really cooperate on these kind of things. How do you look at impact? How do you look at indirect employment? How do you look at emissions? Because that's also, for instance, which is part of this model, right? And now we have launched the joint impact model, and it has been a great journey for cooperation and really making the next steps in impact.
Thank you, Ditske. It's a fantastic insight into not only FMO, but the collaboration happening through the joint impact indicators. And speaking of kind of collaboration and joint impact indicators, Maria-Therese, I want to come back to you, because you also are facing investors and raising capital. And I'm curious, as we look to reporting out to investors, bringing more impact capital into investments, how are these impact management and measurement advances, the safeguarding that Amit talked about earlier, the consistency in how we report as a field, advancing those conversations and maybe making them a little bit more efficient or not?
Yes, absolutely. In fact, when Ditske was speaking, I was really thinking about the other side of the coin, really if you want much more, the commercial capital, the capital that sometimes it's hard to move. Certainly in 2020 was a challenging year. And this is why I said before, I think that the resilience of the impact investing industry was also an excellent selling point to entertain certain discussions. But clearly, I think in the past there was always this a statement, there are too many standards out there, which one to choose. I think the convergence that we have seen in the industry, thanks to the operating principle, but really thanks to I would say a general collaboration of the industry practitioners, has been a convergence to a set of best practice. So today in an investors meeting, we wouldn't have really to spend too much time on the overall education of why we chose, for example, the operating principles, why we think they are relevant. And also, I think, going back to your question, the impact for the communities, I think we have been able to select a smaller set of indicators compared to before. We have been able to really focus on what is material from an impact perspective, which I have to say, and this is, really kind of self-criticism as well, being an impact practitioner, I sometimes look at the data sets that we were collecting in the past, and we were collecting a lot of data, but not really using it. Now we are much more focused on what is material in terms of demonstrating impact, and really try, and I think this is, the overall exercise in the industry, really try to say which are, the measurements that count, and hopefully, get out of the way all the data sets that we have collected, inflicted on our own investees, without really, making much of it. So the materiality, it's crucial. The verification, I think it's part of really, it's almost closing a loop, in the sense that once you go through the verification, as you were saying, Jen, you know what is needed and what is not needed. We have a lot of things that are in our head, but were not on paper. We had a lot of data that we didn't really use in the verification. So we really had an opportunity to put the house in order. And I think this naturally creates efficiency in the communication with our investors, clarity, and really shows, I would say, the same level of rigorousness that they are used in a financial due diligence. Now this is part, core and parcel. There is a set of things we do. These are our tools. This is best practice. This is the framework. And we have also been through an external independent verification. So, and these are the results of, how we are aligned. So I think all of this, it really helps investors. I hope that also helps, let's say, mainstream asset managers and asset owners to embrace the principles. So they're showing that this is not as complicated as, may sound, actually brings in a more inclusive, universe of potential signatories. We are very much looking forward to, scaling up the impact investing world. And I think we need to do this, as we said many times, to address the SDGs with the big guys. So the last thing we want is that they think that this is so complicated that, instead it's really, I think, important to demonstrate on our own skin that it's actually okay, we can do it, and others, asset owners and investors can do it. But certainly, to go back to your point, the communication with investors is much more effective and conducive, and I think clear, because it's all linked up together.
Mm-hmm. And to me, that's a really exciting value proposition that all this work is providing in the marketplace, this increased efficiency in bringing capital into impact investing, and really clarity about the differentiation between impact investing and ESG. And it sounds like, Maria Teresa, we're on the right path, that this is getting us into the right place.
It is. And maybe going back also, I think there was this question that was posed in the chat on, the sustainable finance disclosure regulation, which is, of course, at least in Europe, really keeping us busy. We really are doing exactly what Alison was saying before. We're doing this. We're using the operating principle framework in order to classify, the different funds and their strategies among the different articles. And I think that would also, be a good add-on. Again, we're not using another framework, just really reusing the framework for the classification according to the EU regulation. And that, I'm sure, it's going to be another, big plus in communication with investors.
Mm-hmm. Maria Teresa, how, in percentage of time, or just in, feeling something coming down the road, how big is the EU regulation in your day-to-day work as you think about it coming? Is it something that's monumental and really taking a lot of thought from the team? Is it something that's just going to happen and you'll deal with it when it comes? How is that kind of part of your business today? That impending.
I have some of my team members online, so I need to be very careful about what I say. But it's taking a lot of time. It's taking a lot because there are obligations disclosure, exactly same principles of the principles, right? It's really, you need to disclose, so you need to have a certain level of really intent declaration in your legal documentation. You need to have these, partly also in your reporting requirements. And also depending on, which article, and of course, in the case of Blue Orchard, being impact investing will mostly be Article 9, but depending on which article you are, there are new, safeguards. In fact, the word safeguards that we were referring to is very much part of the EU regulation. And also, I think, again, we need to be probably more clear that, some of it is an investment universe, I guess, some regulatory requirements that are very clear, some are not. All the social aspects of the EU regulation are still to be drafted. So there is a bit of, if you want, a lot of preparation and still quite a lot of unknown. But I think that for impact investors and asset managers, again, it's a great opportunity to really distinguish ourselves. But it's a lot of work, and yeah, so not all the time as fun as you could expect.
And Alison, I'm assuming you're seeing a similar, landscape, sitting where you are, but a little different. But as you look forward and the next iteration of impact investing, you might have thoughts on the leadership role of the Secretariat and the GIN and how it feeds into everything Maria Teresa was sharing, and would be curious your thoughts on that.
Yeah, I mean, I think I wish and I hope there's still time, that maybe the folks at the EU can also join in on the collaboration. Because we're having the same issues, for example, and I think it's pointing to how important collaboration and transparency is, both among the sort of standard setters as well as asset managers and asset owners who are adopting the standards. I mean, what we really want to know, not so much for Article 9 of the standards, which we really are looking to the principles as a criteria. But for the lower articles around ESG and sustainability, we want to know what our peers are doing. To some extent, it's regulatory and disclosure, but we're also hearing from clients that they may set a threshold and only accept funds that are classified as certain articles. But we're not sure what that standard looks like and how our peers are interpreting that. And so there, I think it's a very good example of where greater collaboration and transparency, even right now, would be very useful, because we like Maria Teresa, are trying to do this internally, and it's a black box. We just don't know. I think I'm really excited to see the GIN and the Secretariat and all of our other favorite organizations coming together. I think it's super important to have consistent and seamless leadership. It's very helpful to us. I'm actually doing a webinar in a couple weeks, which is simply describing how we use all of the different standards in our process. And so it's clear, and I was designing this slide, and there's literally like 10 different logos on there, which is fantastic. It's taken us a lot of time, I would say, to figure out sort of the benefits of each system and sort of which parts of those systems we use and which ones are maybe not as additive, but I think also further guidance from these organizations and examples of how asset managers or asset owners are practically implementing and combining all of the different standards in an interoperable way would be very value added. And then, of course, I think where all of this is moving is also a greater focus on data. So obviously comparable data is the first step, and this is very much what today is about. But then continuing to disclose performance data, compare performance data, and as Maria Teresa said, really enhance the rigor of impact evaluation in the same way we would think about return evaluation. And then the final point I would make is, There is a nod to negative impact in the principles, and this is a touchy subject, of course, but I think the advent of climate change reporting has opened up a little bit more space and comfort for talking about carbon emissions, which is inherently a negative externality. And so I think I'd like to see, over time, and if everybody does it, it's easier, of course, but starting to think about how to be a little bit more forthcoming with potential negative externalities as well. There was a great article in the FT recently on ESG, but it was talking about the concept of prudence, and that in accounting standards, there's a higher threshold for recognizing positive claims than negative ones. And maybe that's something we should think about in impact investing as well. It's very easy to say how many beneficiaries we've benefited or lives touched, but I think we're sort of holding back, like the rest of the industry, in thinking about negative externalities as well.
Yeah, thank you for all that. That's a rich, and I'm going to segue to you, Dietske, because I think there's a lot that Allison just touched on, which I'm curious your thoughts on, especially data. And as you rightly said, Allison, today's conversation is really about comparable data and bringing that piece together. And then, where we move from there as an industry. Your seat at FMO, I'm assuming you're seeing this data and the integrity of the data as a key starting point, but would love to hear your thoughts about where we go from there.
Yeah, I must say, for us, 2020 was also a year to really also think about where are we now in terms of impact data, because what you can see, with, let's say, on the financial side, data, there have been for years and years, there have been clear standards, and clients know how to report, what is expected, it's audited. And we realized that on the impact side, we were struggling with the quality of our data, and it wasn't. And it was for us a real effort this year into how can we improve the quality of our data, how can we improve the coverage of our data, and not to to over ask clients, because we are we try to be very strict in what we ask from our clients in terms of impact. But it was a real effort this year for us to improve there. And also, again, a reason why cooperation is so important, and that we get clear standards into, what data we need. How do we then also can we make agreements with each other on how do we treat it? How do we verify for it? Those kind of things are really important if we, if you want to make the next steps with, let's say, impact data, and you want to bring them to the same level as the financial side. So that's a bit about impact data. So there's still a lot of challenges, but I think with everything what is going on, we'll get there.
I like your optimism, and speaking of we'll get there, there's one last question I'd just like to ask all of you. We spent a lot of time in the weeds of data and regulation and convergence, which can lead to a very transactional culture. And in fact, I was part of the Gender Smart Summit last week, and one big conversation was around ensuring our organizations don't become transactional, but the culture that we're transformative as well. That it's more than just counting numbers, checking boxes. That it's important that the culture of how we do our work is transformational. So I'd like to ask thoughts about, as you sit in your organizations, how to push and ensure we don't just become all about numbers and boxes, but don't lose the heart of our work. And Dietske, I'll start with you.
Yeah, thanks. So I think if I consider at least within FMO, it starts with the employees of FMO. And I think that holds for everyone who works in impact investing. There is the purpose and the mission you have, right? So I guess that will always prevail over, let's say data. But on the other hand, I also do see that stakeholders require more and more in terms of, being accountable for non-financial, and this, let's say the sustainability at large. And that is where, you need to strike the balance between, making sure that everyone keeps being engaged. And it is about more than data when you work with clients, etc. And I think that is for FMO, that is certainly the case. Sometimes I wish we would be more strict, could be a bit more strict in terms of processes and data and so. But I do see that data will become more important because of all these stakeholders and shareholders that are requiring more.
Thank you. Allison, pulling you in on this question and your thoughts from where you sit.
Sure. So first when we think about the sort of nuanced impact that we know that impact investing is providing, but it's very hard to capture. I'll just give an example of one exercise we tried on our team, which was we had the impact deal team to assess with no data their own personal views on how much impact each of our portfolio companies had achieved. And it was just totally subjective and totally based on sort of the criteria that they internally applied when they were thinking about this deal. It's that sort of, it when you see it, that you hear a lot of I would say the old school impact investors say, and that's very hard to capture in data. And I can see, there's advantages to both approaches, but we also try sometimes to not rely on data, at least as an internal process, and actually just think about what impact means, what is not captured. And then we, of course, compare those results to the actual data in terms of social and environmental performance metrics. And sometimes they're wildly off. And sometimes they're very in line. And if anything, it just reminds us that data is a lot, but it's not everything. There's still a lot of skill and art to impact investing. And I think, it's important for the industry to be able to do both and achieve both. But I think there's certain things that you can do sort of in the spirit of, I think, Principle 8, like learning and iteration, to really bring you back to some of that nuance.
Thank you. And Maria Teresa, moving on to you.
Yeah, so I actually thought, of course, the investment team is the way that, we are grounded all the time with, their direct contact with the investees and their challenges in different markets. So that's our, let's say, internal continuous motivation. But I also think that another part that I really like, and I really think it's part of impact investing, is the capacity building part. We have the privilege to manage, 4 technical assistant facilities, and I think there is an opportunity really to effectively interact with clients, not only as a lender or as an equity investor, but really creating value. And I think the value creation of capacity building, training, improving social performance management is if you want, a very, very, fulfilling exercise. And I think that's where the relationships also become potentially more, less data-driven, but really more, there is a path, there is somewhere where we want to go, but getting there is as important as the final stop.
Thank you, Maria Teresa, and thank you, Allison and Dietska, Diane and Amit earlier for your contributions. It's been a fantastic conversation, a lot of dimension, a lot of honesty and transparency to move the field forward. I think it's exciting where we are, that we're coming together, we're finding collaboration, we're moving forward and recognizing the opportunity to really achieve the goals ahead of us and the challenges of reaching the capital needed to meet the SDGs. And so with that, I just want to encourage anyone that wants to learn more about the operating principles to visit the website. You heard a little jargon throughout the day, Principle 9 and Principle 8 and Principle 1. For us in it, we know these things, but they're all very well laid out on that website, plus more information about how to learn more and become a signatory yourself. My belief is this is a growing piece of the industry. It's vital for us all to take a part in it and be a part of it. And so with that, I just want to again reiterate my thanks to everyone. And this will be up, I guess, in 72 hours for everyone to listen and share and pass on. Thank you.